Let's talk about the print media space. That's a space which is buzzing. HT Media is up 20%. Jagran is up 5%. Last I checked, DB Corp was doing pretty well. Let's go across to Abhinish Roy of Edelweiss Financial Services. Abhinish is now with us. Abhinish, Ministry of Information and Broadcast has announced a 25% rate hike in the government ads on print media. What do you think is the impact?
Yeah, this is quite positive because government ads are substantial for the print media companies. For DB Corp, it is close to 18-19%, and for Jagran Prakashan, it is around 20-22% of the revenues. So that part of the revenue now grows by 25% in the coming quarter. Some impact, but FY20 full impact. So that's a substantial number because if this completely flows through, there will be a 4-5% growth just because of this. And apart from that, election-related advertising is also picking up because of the general elections. So very positive because till now, if you see, print stocks have come down significantly because of the newsprint margin impact, which is also, by the way, reversing. So we have seen newsprint raw material correct by almost 20% from the peak level. So two positives apart from the election-related advertising also kicking in. So we do expect the relief rally which has started today to have some more steam because this sector, if you see valuation-wise at around 10 to 11 times FY20 is quite reasonable. Although market share loss to internet ads and to TV ads, that will continue. So we would expect some more relief rally for the print stock.
Revised rates will be valid for a period of 3 years. Does that mean the outlook changes drastically for the next 3 years?
Yeah, there will be impact because straight away the growth for the entire company in the print ad revenue stream will be around 4-5%. And apart from that, we would see a pickup in the political related advertising. Also, if the interest rate starts correcting, we will see the auto, the BFSI, durables, white goods and all that also picking up in terms of advertising. So yes, there will be substantial impact. The good part is the hike this time of 25% is much higher than the 19% hike given 5-6 years back. So yes, it will be substantial, but is it something which we were not expecting? No, I don't think that's the case. We were expecting because around 5-6 years had happened. There was inflation in the newsprint prices, in the other cost items for the print companies. So we were expecting. Reasonably baked in our numbers. For example, we expect the pickup in the ad growth for all the print companies in FY20 and Q4. Partly it's because of this, but the quantum I think slightly higher. So there could be 1 or 2% uptick to our assumptions. But in terms of valuation, I think the re-rating will be more.
So what kind of an EPS upgrade, EPS estimate upgrade can we expect? I mean, are we looking at 10 to 12% post this price hike?
Yeah, 10 to 12% of the stock is possible. On the earnings, it also depends upon the newsprint prices. It depends upon the velocity of the election ads. We expect that to be quite high given general elections, given the recent assembly results which did not go in favor of the current ruling dispensation. We expect the intensity in the election-related advertising to be quite high. So the stocks could give 10 to 12% return in the next 1 year.
Okay, so we have this price hike, and then of course we do have the usual positive sentiment in the run-up to the election. So, you know, these two positive factors, do you think it's going to be a blockbuster year for print media in 2019?
Blockbuster needs to be in the seen in the context of print media's market share dip over the past few years, which will continue. Having said that, any general elections and any this kind of a increase is always positive for a few quarters. So yes, in 2019 calendar year, we do expect close to double-digit growth for DB Corp and Jagran in most of the quarters. If you see in FY19, it has been very muted, hardly any growth versus FY20, CY19. It will be much better growth. It will be close to the double digits in most of the quarters. So Q4 and the early part of FY20, we will see benefit of this and benefit of some of the interest rate cuts which are likely. Those should pan out. So yes, this could be a much better year both in terms of growth in ads and also newsprint, which severely impacted margins. So that's why I think this 10 times P multiple of print stocks, that is something which could re-rate, and the print stocks could give a 10% plus kind of a return even after today's move.
What are the top media picks for 2019?
So still we will be maintaining our stance. We expect TV broadcasters and multiplex to remain on the higher side in terms of growth, which will be visible even in the December quarter. We expect PVR to see a stellar number, aided by the acquisition which they did, SPI. Even in case of ZTV and Sun TV, we expect double-digit ad growth to happen in December quarter. So that should continue. We expect print to be more of a tactical play, while our top picks in for FY20 will be PVR, Z Entertainment and Sun TV.
Right, Avinish, thanks so much for that.